FY25 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anupam Gupta from IIFL Securities Limited. Over to you, sir.
Yeah, thanks, Luke. And good morning, everyone, and welcome to the second quarter call for Tube Investments of India. From the management, we have Mr. Vellayan Subbiah, Executive Vice Chairman for TI, Mr. Mukesh Ahuja, Managing Director, Mr. A.N. Meyyappan, Chief Financial Officer for TI, Mr. Shivdeep Singh Jammu, VP TPI, Mr. U. Rajagopal, Senior VP for TI Cycles, Mr. N. Govindarajan, CEO for 3xper Innoventure Limited, Mr. Anurag Vohra, CEO for the Clean Mobility Business, Mr. S. Gopalakrishnan, CFO for the Clean Mobility Business. To start off, I'll hand it over to Mr. Subbiah for the opening remarks, and post that we can have the Q&A. Over to you, sir.
Yeah, thank you. Thank you so much. Revenue, so just go through standalone results for the quarter, and then we'll open it up to Q&A. So revenue for the quarter was at 2,065 crores, compared with 1,970 for the same period last year. PBT was at 225, which is lower than what we were last year at 245 crores. ROIC annualized is at 45% for the quarter, compared with 67% for the same period in the previous year. And free cash flow for the quarter was at 60 crores. In terms of the individual businesses, engineering revenue was at 1,323 crores, compared with 1,274 crores in the corresponding quarter of the previous year, and PBIT for the quarter was 162 as against 169 in the corresponding quarter. For metal form products, the revenue was at 404 compared with 400 crores in the corresponding quarter previous year, and PBIT was 46 as against 53 in the corresponding quarter of the previous year. For our bicycle business, revenue for the quarter was 168 crores compared with 177 in the corresponding quarter, and loss before interest and tax was at 0.36 as against 3 crores in the corresponding quarter of the previous year. And all other businesses, revenue was
Mr. Vellayan, the line for the management seems to have disconnected. Please stay connected while we reconnect the management. Thank you. Thank you for waiting, participants. The management is reconnected. We can continue with the presentation.
Hi, sorry about that. So for others, the revenue for the quarter was at 243 crores compared with 207 crores in the corresponding quarter previous year, and PBIT was at 9 crores as against 17 crores in the corresponding quarter of the previous year. And TI's consolidated revenue for the quarter was at 4,925 crores as against 4,306 crores in the corresponding quarter of the previous year. And the profit for the quarter was at 426 crores as against 490 quarter of the previous year. CG Power, a subsidiary in which the company holds a 58% stake, registered consolidated revenue of 2,413 crores as against 2,002 crores in the corresponding quarter. And profit before tax was at 294 as against 303 crores in the corresponding quarter. Shanti Gears registered a revenue of 155 crores as against 135 crores in the corresponding quarter, and PBT was at 34 as against 30 in the corresponding quarter of the previous year. So let me stop with that, and we'll be happy to turn it over to you for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We will wait for a moment while the question queue assembles. The first question is from the line of CA Garvit Goyal from Invest Analytics Advisory LLP. Please go ahead.
Hello, am I audible?
Yes, sir, you are. Please go ahead.
Good morning, sir. My first question is in last quarter you mentioned about double-digit growth that we are seeking at consolidated levels. So when I look at H1 numbers this year, we are up by 16% Y-on-Y in revenue terms, right? But if I look at the bottom line, that is declining due to fall in the margins. So can you comment how do you look at this scenario, and do you see we will be able to improve our margins from here on and the top line as well in hand in near to medium term, sir? So that is my first question, sir.
So we do expect a better second half. But in terms of specific terms of margins, Mukesh, do you just want to walk us through kind of what we see and kind of what happened?
Yeah. On the standalone business, in the engineering business, the margin has grown, but particularly we had the one-time expenses in the this quarter, which is one time, and they'll get corrected. Like Mr. Vellayan said that H2 we expect it to be much better. In terms of metal form division, we are facing issues with the railway business, and there we have to take some course correction in terms of product development or the cost control, which team is on the job, and we hopefully quarter 2 and quarter 3 will be better for the railway division. Like in the bicycle business, you see the losses are under control and we are operating at a break even. And we see now some export orders are coming in Q3 and Q4, and we expect those things will also be better going forward in the standalone business better. As far as at a console level, even CG Power has done pretty well. SGL has also done pretty well. And TACMPL, we all are aware that it's a growing business, which we will have some losses going forward. But at long-term basis, we are very, very bullish about this business also.
That one-time expense you talked about, what is that? What is the nature of the expense?
It is operational expenses, which are one-time. We to just indicate numbers, it will look like a flat in the engineering division if we take care of those operational expenses one time.
So are you saying in H2 we will be witnessing improvement in the margins from here on, right?
Yes, that's right.
Fine. And secondly, sir, how many dealers do we have for electric three-wheelers right now?
Dealers, currently 83 dealers are operational.
And I think we were having a target of 150 by the end of this year. So is the target intact, or are we facing any challenges?
Yeah. We are. We'll be on target. Basically, the team is in the process of, appointing dealers in north, east, and west. The work is going on. We have also issued LOI for a number of dealers. So by end of March, we'll be reaching the target, as we planned.
And lastly, sir, do you see any near-term risk in our segments like engineering, power, and metal form products?
No, we don't see risk on those things. Rather, we are working on if the cyclicity of the auto industry plays like this, like you've seen in this quarter, PV and HCV both have not done well. So we are looking for maybe some initiative how to further diversify in terms of non-auto or some other initiative. So we don't foresee any risk in engineering as well as metal form.
Understood, sir. I join back the queue, sir. Thank you very much, and all the best for the future.
Thank you. We would like to remind all our participants, if you wish to ask your questions, you may press star and 1 on your touchtone phone. The next question comes from the line of Jinesh Gandhi from Ambit Capital. Please go ahead.
Yeah, hi, thanks. Quickly want to check clarification for the engineering business. You mentioned margins would have been flat if one-time expenses were not there. Flat with the second quarter of last year at about 13.3%. Is that the right understanding?
Yeah, if we see this year quarter on quarter, maybe it's flat, and if we compare with the last year quarter, maybe let's say it's slightly down because of the one-time operation. And we are hopeful to get back in the next quarter itself.
Okay, got it. So sequentially it would be flat margins if one-time expenses are not there. Secondly, if I look at the engineering business revenue growth, that seems to be much lower than what we have seen growth of the underlying industries, which it caters to two-wheelers and PVs in that context. Any reason why growth has been muted? I believe exports also have seen a recovery. So what is that I'm missing over here?
So Jignesh, let's say, let me go segment by segment. Exports has done pretty well in this quarter. We have very high double-digit growth happened in the exports business. And two-wheeler also has done pretty well because even the industry was supported. But as you are aware, PV and HCV industry didn't do well. So those segments, because of the market issues which were beyond our control, but exports as well as two-wheeler, we have even gained shares as well as exports. We are bullish about it going forward.
Okay. So exports for engineering are now close to 20% of engineering revenues, or still lower than that?
That's right. It is 20%.
Okay. Got it. And similarly for metal form business, how big railway business would be now? I believe that business has been not growing for some time now. So is the share of railway now quite small for metal form?
So railway, basically, maybe we are facing issues on the pricing side. So that's
right.
Margin is coming under pressure. But other parts of the business, whether it is auto chains or fine blanking, that is doing pretty well. So railway, now we are controlling it. There is no point in quoting for the tenders which are going to have an impact on the margin. So that business, but it is not very large. Maybe you can say about 15% of the MFD revenues are coming from that division, and which we need to take some actions going forward.
Okay. The reason I'm asking is, again, this segment has seen a muted growth. I'm presuming this would be largely because of PVs being weak. Would that be right understanding?
Yes, like PV is weak. That's why maybe we are doing well in MF Auto also, which is on-frame business. But like you said that because PV was almost leading to a negative growth. So, but margins were very well maintained in door frame business. Issue was basically railways.
Right. So, got it. And third question is on the electric mobility segment revenues, which grew 25% vis-a-vis first quarter. If I look at the volumes for electric three-wheelers, they have gone up by more than 2x on sequential basis. So is that beyond electric three-wheelers, revenues have declined substantially in 2Q, and hence overall e-mobility business growth is just 25% despite e-three-wheelers wholesales growing more than 100%?
Jignesh, can you just repeat the question, please? Your voice is not clear. Can you
sorry. Is it better now?
Yes.
Yeah. So if I look at our electric three-wheeler wholesales in 2Q are close to 3,800 versus 1,750 in 1Q. Despite that, our e-mobility business revenues have just grown by about 25%. So is that business beyond electric three-wheelers has declined on sequential basis by a material manner?
No, sequential basis, there is a growth in the three-wheeler business.
Yeah. Shall I
Go ahead.
See, in Q1, in three-wheeler, we sold around 1,763 vehicles. In Q2, we did around 2,033 numbers. So sequentially, if you look at, the turnover went up actually from 68 crores to 79 crores in three-wheeler business.
Okay.
In IPL Tech also, we sold around 29 vehicles in Q1. In Q2, it was 42 numbers. So there also, the turnover went up 33 crores to 46 crores. So
Okay.
overall, if you look at, the consolidated turnover has gone up from 117 crores to 146 crores in Q2.
Got it. And any update on the existing markets in South India? How our market share has been trending on the electric three-wheelers in the markets where we have been present for some time now? How is the market evolution? How has been our market share evolution in those markets?
Yeah. Anurag, you would like to answer?
Yeah. So, Jignesh, as far as the three-wheeler is concerned, South was the markets where the first launch was done. And we are growing on the market share. We are sustaining this high market share also in the southern region, which is almost close to 24-25% plus. So that's how it has been. And now beyond southern markets also, the volumes are now growing across the country.
Okay. So, sorry, I missed that number. You're saying in southern markets, our market share is 44-45%? Did I catch that number properly?
24 to 25%.
Okay. Got it. Great. I have a few more questions. I'll come back in queue.
Yes.
Thank you. The next question is from the line of Ajax Frederick from Sundaram Mutual Fund. Please go ahead.
Hi, sir. Thanks for the opportunity. So my first question is on exports. So can you help me understand the share of exports apart from engineering, sir, like metal formed and others? Engineering, I understand, is 20%. Apart from that?
Overall, it is 16% for this quarter. On the overall sales, 16% is exports.
On overall sales. Okay.
Yeah.
And sir, what's the outlook like? Because we are hearing some softness across multiple ancillary players. So what is your sense of export outlook?
So we are participating more and more on the geographies. But like you rightly said, Europe is going through a little bit, those markets are softening. So we are alternatively trying the South Asia and the US markets. And we hope to continue this momentum going forward.
Okay, sir. Got it. And sir, the second question is on the subs. So on medical CDMO, what are the plans for scaling this up? Because it has been sequentially where it has been. So just some thoughts on the plan going forward.
So just to share on the medical business, like you are already aware, CDMO. Govind, you take, I think, because medical. Govind?
Yeah, sir. Are you able to hear me?
Yes, sir. Very, very clear.
Okay. On the CDMO, we have commissioned our lab and we have already started working with the customers. So far, we are serving around 30 customers and we have served around 44, 45 projects so far. And so far, most of the customers are continuing with us. I mean, coming with more and more number of projects. These customers include certain innovator companies directly, certain innovator companies through scientist.com, apart from certain specialty chemical customers as well. As far as our plant is concerned, our kilo lab is already commissioned, and as far as the semi-commercial plant is concerned, we are planning to start our batches by end of November. And if everything goes, we are also waiting for one permission from the government in terms of environmental clearance. If that also happens within time, we'll be able to file one or two products by the end of first quarter after the 3 months of stability.
Got it, sir. That's helpful, sir. So on medical, sorry.
Mr. Ajax, please.
Hello, can you hear me? Can you hear me?
Yes.
Sir, got it, sir. That's helpful. And sir, the final question is on the domestic growth outlook. We understand railways is under pressure and PV and CVs are also under pressure. So, apart from this, what gives us the confidence of generating the volume growth we are expecting from the growth side, sir?
So one of the things, maybe let's say for TI, particular engineering division as well as MFPD, we are fully diversified for all the segments of the auto industry, and parallelly we are working on the non-auto applications like large and all these things. So this gives us a confidence that maybe it will keep on happening. Some segments will not do well, some segments will do well. But totally diversification for all the segments in the auto industry and a push on the non-auto as well as export side of the story gives us the confidence we will be able to grow going forward.
Got it, sir. Probably I'll fall back in the queue. That was very helpful. Thanks.
Thank you. A reminder to all the participants, if you wish to ask your questions, you may please press star and 1 on your touchtone phone. The next question comes from the line of Anupam from IIFL Securities. Please go ahead.
Yeah, morning, sir. So the question first is on the clean mobility business. So while you are expanding your dealerships, what we have also seen is that in terms of the overall landscape, clearly Bajaj has emerged very strong, and they are now like almost leading with Mahindra and Mahindra. So what is our plan, at least especially in the three-wheeler side of it, to accelerate the sort of volume share there, and what can actually support that sort of a volume growth to compete with the two large incumbents who are there?
Yeah, Rag, you will take it.
Yeah. So, Anupam, thanks for this question. Now, see, what's happening is we are scaling up as we are going across the geographies. The product acceptance has been quite good in the market. The feedback from the customers is exceptionally well. And we are today now looking at how do we keep increasing the numbers. So as we grow, right now we are present, as we spoke about, close to around 80 plus dealerships are there across 60, 65 cities. But as we keep growing on an all-India basis, we are improving our numbers, and we hope to also improve our market shares. The acceptance is good from the market.
Okay. And especially the three-wheeler side of it, how soon will you be able to launch the cargo version as well?
So cargo version also would be coming in the next couple of months. It will be there. The photos, the beta testing, validation, customer trials are all going on. We will be also introducing the product in the next couple of months.
Understand. Okay. And quickly, can you just update on the other launches? So let's say the SCV as well as the tractor, which was scheduled for this year.
So both the other launches, which is the small commercial vehicle and the farm tractor, would also be coming in this quarter or next quarter. In the next, as I said, in the next couple of months, both the products would be there. Both the products are, as I said, the testing part, the proto testing, the beta testing, the customer testing, the field validation is in the progress, and we hope in the next 2 to 3 months to bring both the products into market.
Okay. And just lastly, in the clean mobility side, sir, last quarter you had said that you have seen improving traction for the IPL tech truck side of it. So any update there? And also what we have seen is Ashok Leyland has also launched a competitor for you, exactly the same segment. So how do you see that segment scaling up in terms of customer acceptance as well as, let's say, the competition coming in?
Yeah, there again, it's taken a while for the customer to first accept the truck, then realize the economics from the truck, right? And now the customer confidence is very high. We are sitting on good number of orders to be fulfilled in this quarter and in next quarter. And it's the segment-wise solutional approach which we have taken up. And customer, when they are themselves realize the benefits of using an EV truck, though it's an expensive truck, a high capex, but when they have seen the operational economics and also the environmental, the benefits once they have realized. So I think it's a good confidence which we are getting from the customers.
Understand. That's helpful, sir. Just one more question. Any update we have for Moshine business? We had mentioned that we were doing some trials with a few customers. Any update there for Moshine, and what's the path ahead for that?
Anupam, the trials were being done for the COS business, which is a lens business as a part of Auto. We are working on the, let's say, capability building to do a larger lenses on that. And the work is in progress. We hope to finish it by next quarter, and so that we are trying to do development of alternate customers in that business, and we expect it to get completed by next quarter.
Okay. Understood. So that you said that is for the optical lens business.
Optical lens business. Coming to Moshine, maybe let's say we continue to, maybe let's say they make the mobile camera business, and there you are aware, the entire supply chain is controlled by the China, and there is hardly any control in the ecosystem, particularly in India. So we continue to operate as of now, and we'll let you know going forward how to handle this.
Sure. That's helpful, sir. I'll fall back in the queue. Thank you.
Thank you. The next question is from the line of CA Garvit Goyal from Invest Analytics Advisory LLP. Please go ahead.
Sir, my question is answered. Thank you.
Thank you. The next question is from the line of Jinesh Gandhi from Ambit Capital. Please go ahead.
Yeah, hi. My follow-up question is on the industrial chain new plant, which we indicated is operating at full capacity. So is the business momentum strong there? Do we need to invest in expanding the capacity now? How do we see that opportunity?
So industrial chain, whatever greenfield plant we have put up, that is fully running, and we have a capacity available to further ramp up the business. Basically, we are targeting the segments agri as well as conveyor and lifting chains. So those development work is on, but the plant is fully commissioned and operational.
And it's operating at full capacity, or there is scope to expand, increase?
Capacity ramp up.
Ramp-up is doable. Okay, got it. And lastly, the medical devices business saw just about 4% growth YOY. Is there any challenge in that business, or it's more of a timing difference leading to just 4% growth?
So it's just a timing issue. We are doing pretty well in the domestic market. Even the last quarter growth was high double two digits in that business, around 18 to 19%. And like you are aware, for exports market in the medical devices business, you have to follow a process of CE registration, and all those processes are on. We expect another 1 quarter or 2 quarters, that process will be over. Then we'll see a good momentum going forward in the export business also.
Got it. Great. Thanks, and all the best.
Thank you. The next question is from the line of Abhinav Ganeshan from SBI Pension Funds. Please go ahead.
Good morning, sir. Thank you for taking my question. I just have two questions for you, specifically on the electric three-wheeler business. So, just wanted to understand that have we received the PLI benefits for? Have we applied and have we got the PLI certification for our e-three-wheeler that we have launched?
No, we don't have PLI. Okay, so we are really on the same subsidy. We don't have PLI.
Okay. Second part is, sir, I'm seeing that we are having a very good dominant market share in the south market. So can you give some more color on how we are going to look at non-home markets for you, vis-a-vis east, west, and north?
Anurag, you will take this?
Yeah. See, Abhinav, it's like this, you come out with a product which is giving one of the best range, one of the best stock, the best headroom, legroom comfort to the customer and to the owner of the three-wheeler. So what has happened in South, gradually that is something is also getting accepted in the northern markets. So our ambition and our dream is to replicate what is happening in South, similar in the northern markets. As we are expanding, we are doing so. not only with the product, but with the complete customer solutioning also, which we are providing to the customers.
Okay, so that was helpful. And can you give some more color on the cargo launch, indicative timeline, and how we would approach that?
I just mentioned, there also a question was there. In the next couple of months, the cargo version of the three-wheeler would also be there in the market. We are already in very close touch with the customers and the end customers for the product. Some control trials have already happened, and we are confident to build volumes and market share and the product acceptance of the cargo version.
I think that is really helpful, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Niket from Motilal Oswal AMC. Please go ahead.
Yeah, thanks for the opportunity. I just had one question on the EV three-wheeler business. Given the way the RM prices have been correcting on the battery side, assuming everything remaining constant from a selling price standpoint, shouldn't the profitability improve meaningfully over the next 6 months to 1 year for our EV business?
I'd say two things. It's kind of obviously very by business, right? We see in three-wheeler, basically the business continues to get intensely competitive, on pricing with Bajaj and Mahindra. But it will potentially help things on the truck side.
Okay, got it. So broadly, I think the scale benefits as and when it comes up, along with the RM benefit, you will start slowly and gradually seeing margin improvement rather than a far more quicker margin improvement because of the RM decline.
Absolutely.
Got it. Okay, perfect. Thank you.
Thank you. A reminder to all the participants, if you wish to ask your questions, you may press star and 1 on your touchtone phone. We would like to remind all our participants, if you wish to ask your questions, you may please press star and 1. As there are no further questions from the participants, I would now like to hand the conference over to management of Tube Investments for closing comments.
Yeah, I think from our side, I think the broad perspective is that we do understand that it has been kind of we've not had basically profit improvement this quarter. Our current outlook is the second half to be better, and we continue to basically stay bullish about our other businesses as well.
Thank you, the management. On behalf of IIFL Securities Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.
Thank you.
Thank you.